Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, folks. Hold on. Wrong screen. I screwed up on how I started things today. Should we go to the camera? Front. Big face. Well, guys. Yeah. Yesterday was quite the day. Donald Trump extending a 90-day pause on retaliatory tariffs. Everybody's still subject to the 10% tariff, but the retaliatory tariffs are taken off, and the tariffs on China are increased to 125%. Eek. So the thing is that when you look at like how many basis points of like tariffs and taxation that is, it comes out to the same amount. So there is not actually any change in the harm to the economy, from my understanding. But him giving the 90-day pause was a big news. Really improved confidence, and the market rallied insane. Oh man, what an insane move. I wish I was recording at the time. Let's come and take a look at it here. Well, you can see it there in the S&P 500. Just absolutely massive rally. Not quite to where we were when the tariffs were initially announced, but the biggest move during all of this. Here's the treasuries. Note the treasuries not having moved all that much, although we did see a big change in the spread. Things flattened back out. Okay. We are a little bit higher. I don't know if that makes sense or not. The treasuries seem to be a little bit unsure about how to take this. But I think that's because the treasury market is a little bit unsure about why we had this selling. And we'll get to that in a bit. Oil, big jump. But still kind of like I would say forming a solid range down at the bottom here. Gold and silver seem to be like somewhat unaffected, but they are higher now. Silver's still lagging, of course. Kappa not as strong of a pushback. The Japanese yen did take a hard fall, but they're recovering that really well. So, and the dollar continues to drop, which, well, I would like to see the dollar lower, but I don't know. Why is that happening? That doesn't necessarily make sense. Bitcoin also rallied. Oh, okay. I'm like super late.
Order submitted.
I'm sorry. You know what? So my algorithm just took a trade during that release of the initial jobless claims. Wait, why is... Oh, you know what? My financial juice tab is all screwed up. Let's fix that. Good morning, Uzi. Well, that was a really... Oh, because we got US... Wait. I am so lost. That's not right. Is it? Well, financial juice is like being slow. Yeah. But did CPI today? What? How did I miss that? How did I miss that? Well, core CPI month over month, spot 1 versus an expected spot 3. That would be a justified move up. Dude, guys, I feel so bad right now that I was that unprepared. Wait, so how did I miss that? PPI is on a Friday? Why did they do that? That's so weird. Okay, whatever. So let's dig into this a little bit more then. Core CPI month over month, spot 1 versus spot 3. Headline CPI month over month, negative spot 1 versus spot 1. That is actually a really big deal. Oh, Financial Juice says that their data provider experienced some technical issues. Okay, well, S&P 500 rallying off of that. So I don't like that my algorithm. Okay, so there's this something super weird. Let me show you something weird that I ran into yesterday. I can't explain why this is happening. So if you come in and you look at my entries here, I guess I never shut down my platform yesterday. So you can see there's all of these entries from yesterday, right? And you look at the name of them. Some are in balance long and some are in balance short. But when I come into trade performance and I pull up trade performance and I just look at yesterday and today, generate, it says that they were all short trades. What? Doesn't make any sense. So like Ninja Trader has like allocated the entries and exits somehow. Isn't that weird? Well, let's see here. What happened in this one? It says that it bought at 04, but it also thinks... No, it got long at 04, and then it hit its stop loss at 04? That doesn't make sense either. So I have come into some really bizarre... I don't know. So I wonder if I disable the strategy and enable it, if maybe that fixes some things. I don't know. I've run into some super bizarre bug in Ninja Trader though. which kind of means that like looking at the trade performance stats does not... I can't actually see how it was performing. I can see that it was like net profitable on the days that we did it. I don't know. Okay, so I disabled it and re-enabled it, and now that chart seems to be not loading up. Yes. Well, so when you looked at the chart, the bot said that it got in at 04 and it got out at 10 and that it took its profits, not that it got stopped out of the trade. So But NinjaTrader caught that says that profitable exit was actually the exit, but it also says that the entry long, even though it says entry long and it was a buy, it says that it was a short. Like what? Wait, let me come back over here. Okay. So it says that it was imbalance long at 04. But see, these two things happened at the same time. And so it doesn't seem to, well, okay, it does see, oh no, it does say that is a 1L. It does say that was a long. But for some reason, when you go back to the trade performance, it doesn't see that as a long. What's with that? Isn't that weird? But it also says that it got out at 04 on a stop loss when it did hit its target, so could have been some movement in there that I just didn't expect. But we do have things set up so that we so that it won't take a trade during news, because I don't want it to trade those. But I think that I have to, collect all of this stuff for the next year. And I've been lazy and haven't done that. Good morning, Gus. I guess maybe I should do that now. But this it's not starting back up, so we have to kill NinjaTrader. It says I still have an open position. Weird.
Order submitted.
And then that doesn't flatten it? Something's very wrong with my NinjaTrader, folks. I've never experienced this. But I'm sure it must have something to do with the catastrophic crash that I had the other day, right? So then if I tell it to shut down, it can't shut down. Just really quick. Not any errors being bubbled up relating to the strategy, at least. Vital. Oh, that's the name I haven't seen in a while. Welcome back. Well, anyways. So I wanted to talk about this thing yesterday because on Monday there was this whole storm about how there was a report that Trump was going to pause tariffs for 90 days. And then there was craziness. There was like a sell-off in the bonds after that. Well, and then they said it's not it. Oh my gosh. Dude, I am so disjointed here. Did you make a live stream on Spotify? I don't know. I didn't know that you can live stream on Spotify. Can you? I didn't know that they had lives. Okay. Focus. Let me finish the thing I was talking about. Okay, so on Monday, there was a news story that Donald Trump was going to pause the tariffs for 90 days. The markets rallied hard, and then immediately the administration came out and said, no, that's fake news. That's not true. So the market came, crashing back down. Then the treasuries sold off considerably from there. And furthermore on Tuesday night. Then Wednesday morning, Donald Trump comes out and pauses tariffs for 90 days. What's going on? Well, how did that news story hit the market? Some guy that had his name happen to be Walter Bloomberg, but it wasn't the Walter Bloomberg, tweeted this. And he says that he misunderstood what Besant was saying in an interview. So that whole thing was just a mistake, a misunderstanding, according to him. But then how did he accurately predict what Trump was going to do and that their tariffs got paused for 90 days? That makes zero sense. So then you got Charlie Gasparino, and he's basically saying that the selling in the treasuries was actually coming from Japan. And he also seems to be implying that Donald Trump folded essentially because Japan was selling because of the bonds. So, like, is Charlie saying that he knows the thinking of the Japanese, or is he just guessing? Because and was Trump thinking about doing this as far back as Monday, and the market was just, that whole story was just a coincidence? You know, like the whole thing, I can't completely square it away. Maybe Donald Trump got the idea for a 90-day pause from that thing that happened on Monday. I don't know. The whole thing is kind of crazy. Now, the idea that it was Japan that was selling at the time, maybe, because if you were to sell treasuries and then turn around and buy Japanese yen, and that would cause the Japanese yen to move up. So it could be. The whole thing is just crazy, man. The whole thing is just crazy. And the thing that I think is the most insane about all of this is that the market has basically like loved that rally so much. Everybody's kind of looking like, oh, it's all over. Everything's okay now. No, it is not. No, it is not, guys. Because you've still got an issue with the biggest trade partner, China. And they put 125% tariff on them. So unless China is going to immediately capitulate, I think we have a problem. All right. I have order confirmation enabled. Oh, but maybe I can't turn it off with the version that I have. I don't know. Super weird. Okay, well, it's turning on again. Uzi says the bond situation won't change until unemployment goes higher. The Fed won't mess with rates unless that happens. I don't know. I don't know if I agree with that. Well, okay, so crushing equities didn't initiate the flight to safety in treasuries. Trump had to reverse. No, but I'm not talking about a flight to safety. So let's talk about one thing at a time. Let's talk about the treasuries first. Okay. It wasn't a flight to safety though. It was selling in the treasuries, right? They're saying that selling in the treasuries prompted Trump to fold, essentially. So crushing equities didn't initiate. Oh, I think I see what you're saying. You're saying that because treasuries did not buy hard enough, Trump had to reverse, because that was the whole point, was for was to get lower interest rates. Yeah. Okay. Maybe. Maybe. If I mean, that all comes back to the theory that, like, Donald Trump's ultimate goal is to refinance the debt at lower levels. We can't really prove that, right? It's like we have to guess what he is thinking, and it kind of contradicts a lot of the things that they've said. But on the other hand, my thing has kind of always been, well, a recession would be very counter to their goals. Maybe they really did think that they could do all of this stuff and get lower interest rates and still avoid a recession. Who knows? Now, okay, Trump could have done all of this tariff stuff both on the low and methodically.
Order submitted.
He did it all loudly, proudly, and fast because they knew the headline would drive equities into dirt. Well, okay, so I don't completely buy that one though either, to be honest with you, because it could just be that he did this as loudly as possible because he felt that that would give him the most negotiating power, right? Okay, so it did correctly take a short here. We'll see how it turns out. So I think this will be an interesting set of trading because the market should be a little bit calmed down from where it was yesterday, and I would expect the algorithm to work really, really well in that kind of slippery market. But how will it do today? As illogical, the entire world would look at him like he's insane from the counterparty side. It's just a matter of waiting on the political fallout to force Trump's hand. Okay, so that doesn't necessarily mean that Trump wouldn't believe that that happened, though. Right? Like that could have been Trump's strategy, and yeah, maybe it's a bad strategy, but who's to say that that wasn't his strategy? Headlines move markets isn't the biggest thing in the world. He wanted the headlines. Well, I mean, the issue here is that I'm not saying that I can prove your position wrong. I'm saying, like, we can't really prove that it's right either, though, right? Like, so we continually. I mean, that's kind of been the theme about all of this, right? Is that we continually come into these spots where we kind of have to try and guess what people are thinking to try and understand what's going on. And we can't really prove that that's what they're doing. Even if they say, even if they say certain things, because they could be lying. When bonds sold and yields stayed up properly up, he needed equities to recover, so he loudly and proudly folded and said it was all part of the plan. Well, I don't think that he really said that it was all part of the plan, but okay, so here is my larger theory about what I think is going on. I think that Donald Trump's strategy here was to try and kind of sort out all of the smaller little in what do we want to call them, violations of free trade between friendly countries, and get that all, like, everybody unified on that first, so that they could present a unified front to China. Then I think that he kind of is using this sort of art of the deal thing to, like, he wants everybody's hair to be on fire and freaking out to really give him leverage and like force people to the table, and then he can kind of capitulate and everything's okay. So I think that is equally as sensible of an explanation for his behavior as that he's trying to crush rates. I think the thing that I think the thing that doesn't really make sense, should I say make sense? I think the thing that makes the he's trying to crush rates scenario less likely is, how are you going to crush rates without destroying the economy? You know, I think that it kind of has to assume a really naive view of the Federal Reserve. Like, oh, the Federal Reserve would panic along with everybody else about the economy falling apart, and then Donald Trump can just renege on it and everything will be okay. But then why would the Federal Reserve have caved, right? Like, the Federal Reserve would not bring interest rates down unless there was already significant harm already done to the economy. And by that point, you've done so much damage to yourself that whatever you would have gained from refinancing the debt at lower levels would be counteracted by the growth that you've just lost. You know, so that could be like a big miscalculation, but okay. So now going back to this other thing that is like, Fed won't budge unless unemployment rises. So I would say that, like, that's I would say that that's generally true, but not technically true. Okay. So the reason that I don't like that is, I guess you're saying in this situation, well, I think that the Federal Reserve would really need to see a change in employment to cut interest rates in this situation. Okay, well, but they cut interest rates back in August by 50 basis points when employment was doing fine, right? So let's not, it's not like a general rule of thumb that you can use that that the employment rate is like the key metric, right? Like, the Federal Reserve can detect problems in the labor market before it shows up in the headline unemployment rate and do things before that happens. I think that that's a really important thing to understand. Like, at some point in the future, it's maybe not this situation, but at some point in the future, you will probably see a situation where the Federal Reserve cuts interest rates before you see the unemployment rate move up. Because the unemployment rate is a lagging indicator. That's why that's the thing why I kind of, like, it rubs me the wrong way, right? You understand, like, when you're looking at the different economic numbers that are released and you can categorize them into, like, leading indicators, coincident indicators, and lagging indicators, okay? Like, the most leading indicators that we get is purchasing manager indexes, right? And some of the most lagging indicators that we get are employment. So you have to understand that the Federal Reserve would absolutely act before you saw a rise in the unemployment rate if they were getting other data that was suggesting that the unemployment rate was going to rise. Okay. Now, here's another take. Okay. I don't know about the Japanese yen thing. Well, is that really what was happening? We don't really know if we really don't know if the treasuries were selling because Japan was selling. Maybe the administration does, but we don't have information on that yet. Okay. But let's just for a moment assume, or let's just for a moment not assume, but let's just for a moment lay out a scenario where it was not Japan selling, that it was a basis trade blowing up. Well, if that is the case, then that's just temporary selling that would almost certainly be followed up almost immediately behind it by the Treasury's buying up super hard when the Federal Reserve has to come in and fix things. Right? So, like, that's another thing that kind of bothers me about the scenario that, like, Trump folded because interest rates weren't coming down. If that's really what happened, then he probably gave up too early. Well, because all he would have to do is wait another week. Something almost certainly would have blown up, and then you really would have gotten lower rates. You know? That's a big week of political fallout to wait out. I mean, they've already... I don't see how the fallout could be any worse than what we already experienced the past week. At some point, it just goes beyond him and spreads to the party. Yeah, I mean, so this is kind of gonna be, I think, the really interesting and difficult thing to predict. Has this already done lasting damage to Republican economic credibility and the administration's economic credibility? Because I kind of feel like that it has. And yeah, it certainly destroyed confidence and stability. That's right. Like, I think the only way that you can have confidence in the administration's economic plan right now is if you believe that this was all just bluster for them to get leverage in negotiations, right? The scenario that you believe, or the theory that you believe, which is actually this was all a bunch of instability to try and get lower interest rates that didn't work, then that should definitely destroy our confidence in their economic competence, shouldn't it? Jesus says, Lord, what happened on CPI? It was much lower than expected. It was a spot 1 versus an expected spot 3. That's a big miss. Funny enough, after it buying pretty hard on the knee-jerk reaction, we are actually pushing lower at the moment. So we should go a little bit more into depth on the CPI, because what I see, my take on the CPI is that confidence was very, very harmed. I'm having a hard time talking today. My take is that economic activity and confidence was harmed even before the tariffs was released, and that was resulting in some degree of deflation. And so that CPI number maybe doesn't necessarily matter, because and even the next month's CPI, you might see it be okay. But then after that, then you're going to see the results of tariffs, and you're probably going to see CPI increase. Right? Because it's just kind of like moving the demand around this this one big event that happened that people were anticipating. Right? So perhaps that is why it has come all the way back, is them realizing, okay, like that was a knee-jerk reaction, but it doesn't matter. One possibility. Now, on the split side, going back to our earlier discussion, what if the reality is that Japan was selling bonds? Well, if Japan continued to sell bonds, that would be a big problem. So maybe that really was all there was to it. And I think the other thing is that is kind of independent of like, why did Donald Trump do it and all of these sorts of things. Maybe he really was doing it to get lower interest rates. Maybe he was really doing it to get better leverage in negotiations. But either way, that kind of all got screwed up when he realized that Japan wasn't going to play along. So it could have been that. If it was that, then that kind of presents a problem, which is like any kind of gamesmanship that Donald Trump thinks he's going to try and play in negotiations won't work if any one individual country decides that they're not going to play ball and start selling their treasuries. Right? If it really was he folded because the treasuries were selling, then that means that practically every country in the world has a trump card against any kind of economic action that the United States tries to pull. That would kind of mean that the US has zero leverage on anything. So I guess maybe that's why I kind of want to believe that it was not Japan, or at the very least that Donald Trump was not capitulating because of that. What's wrong with bonds liquidity during extended trading hours? Well, the liquidity is always going to be less during the extended trading hours, right? When you're outside of the time between 8:20 Eastern time and 3 o'clock p.m. Eastern time, outside of those hours, the liquidity is not going to be as good, generally speaking. I guess I shouldn't say 3 o'clock. I should say 4 o'clock, because that liquidity does tend to stay around until the S&P 500 closes. But there's going to be less liquidity during extended trading hours. And because of the volatility that we've had, the liquidity is disappeared. The way that the algorithms work is basically like, well, when things aren't going well, when volatility is high, that is not advantageous for the market makers, and so they just turn their market making algorithms off. How you mentioned crypto. You know what? The one kind of thing after all of this is that was getting a little excited that maybe this would all cause cryptocurrencies to collapse and the whole MicroStrategy saga to come to an end, but it didn't last long enough. Again, I'm sitting here and I'm like, well, Trump, if you were trying to get interest rates lower, like, you were almost there. You're almost there. Somebody's blowing up. I don't know. But the other thing is, well, rates are like at 4.34. And that is just too high in my opinion. Even if I mean, let's be honest. Do you think? Let's be honest. Let's be honest. And then I'm going to ask you because I'm saying let's be honest because like I think that you all probably agree with me, but maybe you don't all agree with me. And that's why I'm asking the question. Okay, so do you think that interest rates would be this high if Kamala Harris won the election? Because I don't think they would be. I think that financial conditions are tight, that it is absolutely squeezing the life out of certain sectors of the economy, and that if you don't lower interest rates soon, that it will spread and it will cause a recession. And if we didn't have the trade war going on, then that's what we would be seeing, and the Federal Reserve would be cutting interest rates. When did you grow up? Rates are low. They are too high. I didn't say they are high by historical standards. They are too high for the current conditions. They are restrictive. It is a drag on growth, and it is squeezing the ever living life out of certain sectors. What's happening is those sectors, like those people, they're unemployed, things like that, but they have unemployment benefits and severance, and the larger economy is doing okay, so people can support them. It's not turning into that like spiral yet, but if it goes on for much longer, all of those resources kind of dry up, more layoffs come, it very quickly turns into that spiral. Because it is restrictive. I'm new to the channel. What are your thoughts on Forex? So, I personally don't like trading Forex for a couple of reasons. Okay. Number one, in order to trade Forex, you have to basically trade against your broker. So there is like a fundamental conflict of interest between you and your broker. And that I think is something that's never going to work in your favor. Two, a lot of the useful information that you're going to be able to use to understand what's going on in the market, you cannot see in Forex. We can't see the order flow, and the order flow is very, very important to just understand what's happening. You really don't understand what the market did if you can't see the order flow. Third, a lot of the things that move Forex are going to be decisions by countries that you're not going to be able to predict ahead of time, and you're not going to be an insider. So the real edge there in Forex is not really very available to you. So for those reasons, I am not a huge fan on trading Forex. That said, in some places, Forex is like the only real game or option that you have. So people do what they're going to do. You could totally trade the Japanese yen and just assume that it's going to be correlated with the treasuries, and maybe try and trade them in a similar way to the way that we trade the treasuries possible. You're wrong if you think growth only occurs under low rates. No, that's not what I said. I said that the financial conditions are restrictive. Current interest rates are a drag on growth. So you're misconstruing financial conditions with the absolute interest rate, right? Okay, changing the absolute interest rate, like moving interest rates higher or lower, changes financial conditions. But that's all relative to like where interest rates were and all of the other things that are going on in the economy. So financial conditions are tight. You could have a situation where interest rates are like 5% and that's actually easy. That's possible. I don't know if it's ever happened, but it's possible. But in the current conditions, financial conditions are tight. It is a drag on growth. And in particular, if you look at white collar workers, that sector is straight up in recession. It has decreased in size more than 2 quarters in a row. Okay, white collar workers are in a recession. Cheap money also fuels inflation. Yeah, but you only get one interest rate. I mean, that's ultimately the problem, right? You get one interest rate, and on one hand, you're going to say, well, we need to keep inflation down. But then on the other hand, you're going to see that this sector of the economy can't handle those interest rates. And at some point, that sector of the economy is going to come down and it's going to drag the rest of the economy down. And then you're going to have to lower interest rates anyways. Okay, Vital, is pulling and stacking data on the DOM help with trade decisions? Yes, it absolutely does. So the way that I would think of it, Vital, is there are 6 fundamental forces. There are market buys, market sells, limit buys canceling, limit sells, and limit sells canceling. Okay, so market orders, limit orders canceling. 3 forces, buy and sell side each, 6. Okay, and you can kind of look at each one of those things as like a rate. Like if you were to look at it over a 1 minute period, like how many orders on average cancel? How many orders on average are added? How many market orders on average are coming through? And depending on how those different forces are changing, basically determines where price is going. So a lot of people have this idea that like, well, because limit orders cancel, that makes order flow useless. No, that doesn't make order flow useless. The fact that they are canceling, it tells you something about the market conditions that is really, really useful to your trading. So now you can come in and you can say, okay, I am seeing more orders cancel per level than average. That is what I term a slippery market. Like the resting liquidity is kind of there, but it all pulls in front of it. It tells you something. And now institutions show their hand by placing their inventory on the DOM. That's not true. Sometimes they do. But your whole conception of, you know, what we're even looking at on the DOM is incorrect. You think that the way that we're trading on the DOM is the large players are telling us what they're doing, and so I'm looking for this big order, and I'm going to trade it in that direction. And if that's what you're doing, you're trading the order flow wrong, okay? But how the market move, like the price is a straight up direct results of the orders that are placed into the market. That is the market orders, the limit orders, and the limit orders canceling. And so in order to understand why the market is moving the way that it is, you have to look at the orders. There's no way around it.
Order submitted.
It wants to go short again, huh? You just have to get away from this this really simplistic retail trader understanding of order flow, right? Like that you don't understand. There's a problem in the trading space in general, which is like, how do you get people's attention? And so a lot of educators and people like that, they marketed order flow in a certain way that would grab people's attention. And that was basically like saying, hey, they're going to spoof. You don't see that as much anymore, but like no BS day trading, that was totally the way that he marketed it, right? Was like, they're spoofing. And when I talk about spoofing, it gets a lot of attention. Okay? But that's not what makes the order flow useful. Okay, so I'm saying institutions aren't showing their hand on the DOM. Well, so I said that that's not true, right? That even that individual assertion is not true. I mean, sometimes they do. Okay, sometimes you got a person that they have a big transaction and they kind of want everybody to know about it and they advertise it. That happens. Sometimes there are situations where like there's just no way around it and they kind of have to show you. But then there's another place where we can kind of say that like, well, most institutions are trying to hide what they are doing, but there are some things that they can't hide. So yeah, if the evidence that you're looking for is a big stack and pull, then I think that you're probably going to have a hard time reading the order flow. But that's not what I'm looking at, right? I'm looking at like imbalance in the market orders and things like that. If you're a really big player and you're buying a ton of something, you can't do it all with limit orders. You just can't. There's not enough. You're not going to get filled. They have to use market orders, and you can see that in the tape. So their large meta orders do have evidence that is unmistakable and cannot be hidden. Institutions are not playing poker. They are executing the game on a professional level when you're trying to make money, not just offer brokerages, mostly automated at the moment. Yeah, I think that that's generally correct, Andre. Most of the, I think that another mistake that we make as retail traders is that we have this conception that everybody else functions and thinks like we do. And the reality is that the professional world doesn't think the way that we do at all, not even remotely. The people that are coming into the treasury market today and are trading, the majority of them don't really care whether the treasuries are going up or going down, and they are not trying to place some bet on whether they're going to go up or they're going to go down. They have business that they have to transact. They have to buy treasuries for their business. And they're not really trying to make a play on what is going to happen today. All they are doing is they are executing their big order with as little impact as possible. So going back here, Amanish has said, the instances you speak of are so rare you can't bake on it. That's not true. It's the largest forces, and it happens every day. I think that is probably like the biggest piece of information I can give you that retail traders miss. I kind of focus on higher level things to kind of help you understand the whole thing and why people come into the strategies that they do and why they don't work. But the largest forces in the market are price insensitive. They're like index funds and rebalancing. Jacob, welcome back. Not trading currently. Yeah, well, I wouldn't necessarily actively trade in these conditions, right? I haven't been. But you've been programming. What are you programming right now? Andre, yeah. And when you see big transactions at the end of the quarter, that most likely is rebalancing. If they have to sell 1,000 contracts, they're going to sell it, and they don't want to show that. Yeah, except for that, the numbers that we're talking about in treasuries, at least, are a lot more than 1,000. Like I remember them traders telling me that like 60,000, like when they were kind of doing their own studies and stuff, and looking at things, they were basically like 50,000 was like a minimum, because that was just like the size of the orders that they were usually dealing with, which sounds so insane. Aminesh says his methods work. That's not proven, so you have yet to see a Dom trader post consistently profitable results. Okay, selection bias. I've never seen any kind of a retail trader that posts consistent results that are in line with the kind of performance that I think that we should be looking for when we're going to say like a strategy works. Okay, so Adele Ola asks, is money greater and more alive than a human being? I think that's going to drag us into a discussion that would be too much of a distraction right now, so I'm not going to answer that.
Order canceled.
Wait, what did it just do there? Oh, it had a short. It basically took it out at, well, I think it maybe lost a tick or two and flipped around long. You've been here weeks, Aminash. Sorry, but you haven't shown jack shit. Okay. I have absolutely zero tolerance for narcissists that want to come in here and try and aggrandize themselves and say, oh, well, I am right because I have made money from something. First of all, you haven't shown that you've made money. You haven't shown that you've made enough money for it to be like statistically significant. 3, that wouldn't prove that the strategy is correct because we can't prove that you were actually trading the strategy. You might have gotten lucky. There's all of these other kinds of factors, right? So you haven't proven anything. All you've proven is that you don't listen, that you have absolutely no clue what we're talking about. You sit there and you say, well, I already know everything, so I'm not going to listen to anything that Seth says. And then you make the same stupid arguments over and over again that we've already completely dismantled and shown the logical fallacies behind them. All because you can't get over yourself. And that fact alone is probably a really good evidence that you're probably full of shit. That you're actually not performing all that well, but you just lie to yourself because you're a narcissist. That's what they do, right? Yeah, you're not on video preaching, but you're on chat on YouTube preaching. Okay, so you're on here wanting to charge 5K for a bullshit, unproven method. That is absolutely false, Amanesh, because I do not sell a method. Again, you don't listen. I provide empirical evidence about proven market behavior. That is not a strategy. That is not a method. It is purely empirical evidence about the market for you to understand the market. That's it. And I'm not gonna charge 5K. I was talking about like doing a workshop, right? Where you're like, we're talking online workshop for like $1,000, for like $1,500. I think that for like that kind of personal attention and the amount of time that it was going to be, that is a reasonable amount. Amanesh says that's bullshit. There's nothing bullshit about it, Amanesh. Look, Amanesh, I did not come up with this shit. Okay? There are dozens, hundreds of peer-reviewed studies over the past 30 years. All I'm doing is sharing with you the information that other people have proven in empirical studies. It's information. Like when you add that, and then there's all of the information about the market. I would say that this is all information that you probably could just find your own on the internet, right? But you probably wouldn't find it on your own. That's why I think we need to make a course. Unfortunately, see, I have kind of the advantages of having worked in the industry and kind of knowing how these things work and so forth. That kind of give me context in order to find the information and compile it all together that an average person wouldn't find on their own, right? The average person is only going to be able to see what they're shown, and that tends to end up just being bullshit. So I do think that we have an obligation to collect all of that information and release it in some form. And I also believe that I have an obligation to sell it, because if I sell it and make money off of it, we can use those resources to give it a wider distribution. Okay. And that is not a method or a strategy, but it is information that I believe will help traders. It's a lot better than the bullshit that they're taught by everybody else. Amanesh says none of that is actionable, or else you'd be trading it. Well, it is actionable, and I do trade it. Have you known any good swing traders? No. The guys that I knew were block traders, essentially. Okay, we're getting Fed's Logan comments here. Tell you what, I'm impressed with this trade the algorithm has taken so far. Waiting for them to finish on Logan's comments. Amanesh, that's not true. We take live trades. The only reason that we haven't taken live trades since October is because of the my employment situation. But do we take live trades every week? Or we were. Javante, what is block trading? Okay, so when I say block trading, what I mean is like maybe a hedge fund, they want to buy a ton of something, and it could be for a number of reasons. Could be that they have some prediction. It could be that they're a momentum strategy. It could be whatever the deal is, they need to buy a lot of it. And so there are trading desks that essentially specialize in executing those big orders for them. So the trading desk will quote them, will calculate how much executing that order will move the market, and then quote the client an amount, based on that, so that they make money executing that order. So if they can execute the order for less impact than what they quote to the client, then they make money, essentially. So, is that a major factor in why I came down on the way that I trade? Maybe, because a lot of my view of the markets really is kind of like a block trader's view. I'm really concerned with things about optimal execution and how they execute and things like that. But I don't think it was because of the guys that I knew at Goldman Sachs. I think it is because the empirical evidence kind of suggests that if you're a retail day trader, that's probably the most fertile ground for you. Okay, empirical market behaviors are not trading methods. Yes, that's what I said, Amanesh. Thank you. Okay, you actually listened for once. For some, I mean, actually, I don't think you listened because you're stating something that I already stated and thinking that it's an argument against what I'm saying. No. Empirical behaviors are not trading methods. You're supposed to take that information and make your own trading method. If I gave you a trading method, it would probably stop working because it would get popular and people would ruin the edge in it. What you're supposed to do is you're supposed to take the information that I'm giving you, use that as a base, do your own research and find your own inefficiencies that nobody else has found yet. Things that you probably wouldn't have found if you didn't already have this wide understanding of the market. And then build your strategy off of that. I'm teaching people how to fish. I'm not giving them fish. In all honesty, it really does truly piss me off that I'm coming in here. I'm trying to be as open and honest with people as I can about what we're doing. I go to great lengths to ensure that everything that I'm sharing in the videos, at least, obviously there's a lot of opinion during the live streams, but in my videos, to share proven empirical information about markets and to teach people things that retail traders have been getting wrong and have been leading them down the wrong paths for generations. And all I get is this bullshit for it. Everybody attacks me for being like the one person out there that's trying to be honest about this stuff. And I'm the one that gets attacked. It's bullshit, man. It pisses me off. It really does piss me off. It brings me back to this thing that's like, if you want good content, you have to reward good content. And what happens is if somebody comes in and actually tells you the truth about things, you jump all over him. And meanwhile, the people that are just outright full of shit and so obviously lying, oh, I wrote this algorithm named Enigma that runs the market, and everybody praises them and they become this huge celebrity. What the fuck, man? You're going to come around and harass a creator. Why don't you go and harass the scammers? It's fucking crazy to me, man. You know, something that I come back to, or I think a lot about, is like, why is the retail trading space the way that it is? Because I see this behavior a lot, and not just with me. You know, it seems to me like narcissism, right? The people, they come into trading because they think that they're better than other people, and they're smarter than other people, and they're going to figure something out that other people haven't. Yeah, I mean, you have to come into trading, right? And then they build their entire personality on, oh, well, I was a profitable trader, or whatever the deal is, right? So when somebody comes along and says, well, look, I have empirical evidence that you're full of shit, it bothers them. They can't handle it. It triggers that narcissistic injury inside of them, because they've said, well, I'm worried about how other people perceive me, but I fixed that because I was successful in the market. And when Seth says, no, you weren't, it triggers their narcissistic injury. But at the same time, I'm not sure if that's actually why the retail space is the way that it is. Because this evening I was thinking a lot about insider trading. So like, the thing that is funny about how this whole week has gone with Donald Trump and everything is that yesterday he literally told us that he was going to pump the market. He tweeted, he says, stay calm, now is a good time to buy, and then DJT, promoting his stock essentially. So I didn't see that this is now a good time to buy thing, but he was essentially saying, hey, you should buy now. And if you had bought on that tweet, you would be very, very rich, I think. Or you could be. I saw a guy on the day trading subreddit that had 0 day to expiration calls on SPX that would have been worth $500,000 if he had held them. But he exited at break even. Yeah, you could have made a ton of money off of Donald Trump's tweet.
Order submitted.
And people are upset. People are upset. So there's this thing, one of the things that I've noticed kind of triggers retail traders is this idea that people could be trading on things that on information that they don't have access to. Because retail traders think that the law is set up to protect them from that. When the reality is that markets wouldn't have any point if you could never take a trade where you were at an informational disadvantage. There's rules against insider trading for stocks, but that really only applies to like private information about a publicly listed company. And like pretty much anything else is not fall under that definition. So it kind of seems to me that because retail traders have this idea that like, well, it's supposed to be fair. There's not, but other people aren't supposed to be able to trade on things that I can't possibly know. And so that's why they pursue the methods that they do. Because they think if the game is supposed to be fair, then I have to be using information that is available to everybody, the price in this particular instance. And I just need to be analyzing it better than other people. And that's the approach that they take. Rather than what I'm telling people, which is based on our understanding of the market, the best edge that you can have is to be informed, to know something about the market that other market participants don't have. So going back to Amanesh, kind of, attacking me, why is that such a controversial thing to say? that there's an edge in being informed. It's just, it's such a it's so ridiculous, right? To me, it's like, it should be self-evident. It should be self-evident, but apparently it's not, because we have this conception of the market that's just objectively wrong. And once you actually come in and look at like what the market is and how it actually works and what's really going on, and not just our idealized idea about what the market should be, it's self-evident that people that know what's going to happen have an advantage. And that yeah, it's hard to find those as a retail trader, but you can. And I'm not sure if there's really a really strong opportunity outside of that for retail traders. So I think it's the same psychology as for conspiracies and other things. It's easier to develop fancy stories than it is to believe how random things are. It is. Like, the whole complexity economics thing. Like the thing that's really crazy about it is, okay, so I'm teaching you guys empirical information about the market. I am not saying I've made $1 million from it, okay? There are people that have made billions of dollars off of complexity economics. They've been making this money for like 40 years now, and people still ignore them. It's like I remind myself of this all the time, because sometimes I say, well, maybe things will be different if when I'm in a better spot to take risk, and I take some of these big risks and make some big money from it, and I can turn around and show it, because it seems like that's all anybody actually wants. But then I remind myself, well, no, because Jean-Philippe Bouchot is co-founder of the most successful commodities trading advisor firm out there right now. Doyne Farmer was there and started the first quant firm, the probability company, and many other of these researchers have made huge gains. I mean, all these people that you idealize, that are algorithmic trading and all of that, like, that's how they're doing it, and people still ignore them. And there's this whole, like, the whole of economics is basically ignored their findings. Not that they're saying like that they're wrong or anything like that. It's just like they don't care. Even though these guys have basically figured it out and solved all of the biggest conundrums in finance of our day, they still get ignored. Why is that? Well, I think that it is because if there is any kind of like human behavior that I've found is consistent, it's that humans will avoid complexity because our brains simply can't handle it. The brain knows that it can't solve those kinds of problems, so it just avoids them entirely. Pelosi just sneezed when you said, right? Yeah, human nature believes the guru who shows big P&Ls who look like they are trading, but instead they are making $100,000 a month from combine referrals like that Wayland scumbag. Andre, I think it's the same psychology as for... Oh, no, I already read that one. Analyze the price order flow the other day and saw someone buy 7,500 lots, market jumped 3 ticks and then dropped 60 handles. Oh, when was that? Well, something that I find really weird lately, I mean, I would say that this behavior has always kind of been there, but it's become more dramatic as of late, is that like anytime that there's a big news drop or there is like even breaking news, there's some sort of massive like stop out just before that. It's like the market has to go the wrong way and stop a bunch of people out first, and then it goes up. In fact, you saw that with Donald Trump's tweet yesterday. There was a shakeout just before it jumped up. What's with that? I don't know. I used to think that it was just like, well, you know, you got a lot of people with positions on, and then as soon as the news comes out, they take them off. And sometimes it just kind of works that way, and like maybe they're okay with it. But now I'm starting to wonder if like there are algorithms that intentionally will like sell a bunch of it first and then buy a ton of it. And that algorithm has become so dominant that I can see it now. Because it's happening a lot. But you know, I don't know if that's anything that we can prove, or you know, like I'm kind of guessing that that's a behavior that is maybe being seen in the market right now because of how other people are behaving, and not because of some behavior of the market or anything like that. So there wouldn't, if that's the case, I don't know if there'd really be any way to prove it that that's even happening, right? I think that's part of the fuel that helps them move. Also, the lack of liquidity after move helps the real one look stronger. Yeah, well, and like so I've always known that like if you want to increase your impact, you can sell a bit first and then buy, and that will increase your impact essentially, because you're creating a little bit of a hole and then you send it over the hole essentially. But that doesn't really make sense in a situation when like all of the liquidity is pulled anyways. So why do I see it around news events? That doesn't make sense. Does selling a bit of it first and then buying it still make a difference even when all of the liquidity is pulled? I don't know. Well, this rally has been pretty good, and I'm pretty happy with the amount of favorable excursion that the robot has gotten, but it's come back to break even. So I'm seeing this a lot. I don't think that there has been an instance yet where the algorithm we're testing here has taken a trade and there wasn't at least a little bit of favorable excursion. It's just that we don't have any kind of a real exit programmed. It's basically just either a target or a time-based one. And I'm not really seeing anything that I think would really give me a really effective exit for this. And the issue is, so in my own discretionary trading, how do I handle this problem? Well, the way that I handle this problem is I have a theory about what is driving that flow, and I have an estimate for how much imbalance I think I'm going to see off of that. And so when cumulative delta reaches that number, I just get out. Should I be doing it like go long and wait until cumulative delta has changed to 10,000 contracts and get out? I guess I could program that. I feel like that now is a bit bad time to program it, though. I was kind of thinking there for a second that maybe it was about to keep pushing up, but it's taken another hit there. And it seems like that the equities are getting a little more active as well. So like there's a good rally going on in the equities and the treasuries are selling because of that, I think. That's why high leverage is a pain for discretionary trading. You get the hints that the market will trend up, but you have no idea if you entered the right time. And sometimes you gotta let it. Yeah. Well, yeah, exactly. For kind of yeah, like discretionary day trading, for sure, for sure. You know, I tend to err on the side of just trading it as early as I realize that there's likely to be some sort of imbalance, but that very, very often ends up in me being way too early. I'm still thinking about Tilt and how he's probably just going to come back tomorrow again, right? Fake job seekers are flooding U.S. companies that are hiring for remote positions, tech CEOs say. Yes. That is happening. So what I think is going to happen in the job market is that it'll either be LinkedIn will have to change, or some other site will come in and supplant it. And that website, you will basically have to like prove your identity in some way. Prove your identity in some way. And then that way companies know that all of the resumes that they are getting are legit. And also, like, you could be like, oh man, maybe this is possible. Is it possible to do something where, like, not only do they have to verify that you're a real person, but they also have to verify your employment history to, you know, prove that you have this many years of experience with this technology, and make it so that you just straight up cannot apply to a position unless you meet those qualifications. And that way, companies that are hiring can put filters on and know. Because I think one of the issues is, like, you get tons of resumes. So then you say, okay, I'm going to make the requirements more strict so that less people apply. But then everybody just lies. And so that doesn't do anything. Right. And so then you get into this situation where they the people that are hiring, they put the requirements that are so high that nobody can ever actually fill them. And so then nobody's able to get through the interview process, and they're like, nobody wants to work. But if there was a company that was an intermediary that was able to guarantee that the people that were applying were truthful about their experience, then the company that's hiring would have to face that their requirements are unrealistic a lot quicker. Because they would put the job up and nobody would apply. Right? Because nobody would be able to apply. Or even they would be able to go in and look at the requirements, and then the system would tell them, these are the number of candidates in our system that meet these qualifications. How much is it lose? Oh, it's still just, oh, that's interesting. Okay. I thought that my algorithm was, like, really down on this position, but it's not. It's doing okay. When I started, I read a lot about Elliott waves, and that messed with my trading now, because I still see moves as beautiful, but I end up in a chop out. Yeah. So one of the things I always thought was really weird was we did that survey, like what are things that you use to trade and what are things that you explicitly exclude from your analysis, and for some reason Elliott waves was the top one. Is there some guru out there or something that like really trashes on Elliott waves? Because I was really weird that was the one that stood out. I kind of thought that it would be mostly random. I would really like to, I think if there was a strategy I could come up with that I think could be really profitable, like the most profitable and the most revolutionary, I think that it would be, let's watch social media and YouTube and track the popularity of different strategies and trade against them as they become popular amongst retail traders. And I've thought quite a bit about how I might do that, because I think that we have the technology to do it, but there's like some issues. And the biggest problem that I have with it right now is that the retail trading industry isn't actually progressing. It's been that they're obsessed with price action, and smart money concepts is just another form of price action. And that's been the thing that the retail trading community has been obsessed with for like the last 5 years. And I haven't really seen some other alternative technical setup come about that I could be like, oh, this is the next one. Let's watch watch it blow up, and then, you know? I don't really see YouTube creators really putting out very much new. Okay, it's coming back here. If they're able to get back up to 08, that would be really, really positive for this position, I think. Because it only came back to the 50% line there, right? Smart money concepts was popular on older forums as well, even since the Great Recession. Yeah, so my understanding of it is that ICT himself has been a like known promoter out there as far back as like maybe even before I've been around, like as far back as 2016, I think. Because the Baby Pips forum, they have this insane thread of like every crazy claim that he's ever made, and it's like it will take you a whole day to read. It's crazy how much they collected, but it was always a thing that was okay. So we're getting some comments from Fed Smith, and I'm seeing a little bit of movement off of that. Okay. So what I'm hearing is kind of more of the same line from people about the balance of risks and things, but not any comments that are relevant to like what we just saw happen with Trump and all that. So I don't know if it's going to be a huge deal to the market. Apparently there's going to be a release from Bowman too, so it makes me a little bit nervous, but yeah, the robot's going to do what it does. Robot's going to robot. Okay, anyways, so like ICT had been around for a really long time, but he was just in the Forex space and everybody kind of ignored him. And then what happened was around the COVID time period, he decided to come into futures because of these funded trader programs that were coming through, right? And then there was kind of this place where I kind of wonder if they're related, but I remember that Vinny E-Mini and ICT had a beef with each other. And then because at that point, ICT was a relatively, it was just kind of like a so successful channel. But then after that was when it really blew up and it was like all over YouTube, right? So I would say that like the price action thing has been kind of like retail traders' favorite approach to markets, going as far back as 2016. I know someone who follows ICT method and claims he's successful. Well, I mean, this is kind of one of the issues with it, is that I think that ICT's strategy is carefully crafted to make people think that they're doing well when they're not. That and this is very, very common amongst all of these hypes that you get from the gurus, is like the gurus kind of encourage them to take asymmetric risk so that they themselves can't or don't really get very good feedback about how they're actually performing, because when they lose, it's like it happens all at once. Have you heard of SMB? I've definitely heard of them, but I don't really know a whole lot about them. I think that's one of the things going through this period of unemployment, and my one of the things that my parents told me was like, well, when things, we're very religious, when things happen like this, there's something that you're supposed to learn from it. And so you need to learn from it quickly so that it can end. And I'm kind of going through this like, well, what are the things that I've learned from it? Because, I feel that my family itself has dealt with it really, really well. I never, of course I get like really concerned at different points and stuff, but my wife was always 100% there and never, just was absolutely perfect through all of it. Absolutely perfect. So like, I don't think it was there, but I've definitely had evolution in my thinking, especially about the YouTube channel and maybe what I want to spend my time doing, because, well, first of all, I was able to put a ton of effort into the YouTube channel that I wouldn't have been able to otherwise. And I also, this idea that like I should push harder to make a book or a course or something like that. I don't think that is a conclusion that I ever would have come to without the pressure there, So like, but I really have kind of come to this conclusion that like, I really should make it. I think one of the issues that you get with education, and the reason I'm bringing this up is like with SMB Capital. So what do you think of them? Well, you can't really know what you think of it without taking the course yourself. Like, you can ask other people about what they think about the course, but I don't know if the feedback that you get from other people you can necessarily always rely on, right? It's just like with, okay, everybody who follows ICT claims that they're successful, even though we know that that's not the case. that they don't perform well at all, and that they fail just as much as every other retail trader. So you can't base it off of that. How can you determine that, right? And the issue is that they can't necessarily tell you what the content is, because if they told you what the content is, that would give away the strategy and the information that you're paying to get, right? But I think that what I can do is I can give you in our course a very, very clear idea of what you're going to learn from it. Even so much so that you might go, oh yeah, I can just take this outline and like research all of the topics myself. But and the bet that I would be making is that you would very quickly realize that it was far easier for you to just get all of the information from my book and pay the reasonable cost for the course. You know? But I don't know, maybe we try and get it published. That might be another way of approaching it. So you have, let's see here. I think the payoff of a prop firm compared to the combine and maintenance costs, even with an underperforming strategy, you can win money in the right context and the right calculus. Yeah. I mean, so I think another issue that we have, and this is kind of beyond ICT or anything like that, is that the prop firms have successfully convinced the trading community that they are the paragon of performance standard that everything should be measured against. So if you are able to pass a funded trader program, then that must mean it is a profitable strategy and you are a profitable trader. The reality is that you should be able to pass it 30% of the time. So passing a combine is actually not that big of an accomplishment. And the fact that many people will have to try like dozens and dozens of times before they can pass a funded trader program kind of should be like a warning that like your strategy sucks. I think when I was doing the funded trader programs, that my trading sucked. It was worse than random. I've had some nightmare stories about. Oh. You saw that thing about the prop firm that went under, that like when there was a bunch of traders that were doing well and were basically going to pass, they basically sent them all out an email about their performance to mess with their heads, and then sure enough, all of those traders started performing badly. Like they don't want you to pass. Isn't that crazy? I wonder, this is a heuristic, but how far do you think that this heuristic extends? When you're doing business with somebody, I really don't think that you should do business with somebody that has incentives that are directly opposed to your own. Prop firm makes money when you lose money. So is there really situations where you should enter into an agreement like that? I don't know, man. Andre says they want a small number of people to pass just to show the others that it can be done. Yeah. Like they want like 10% of people to pass. Pass it and maybe even get a payout so that other people believe it. Because I really think that the best analogy for how prop firms function is like carnival games, right? The carnival games are basically all kind of
Order
rigged
canceled.
against you so that the majority of people will fail, and they want a certain number of people to succeed, especially early in the day, so that they all have these giant stuffed animals and they're running around the carnival with this giant stuff so that other people want to go and do it. Funded trader programs are trader carnival games. Now, why did the that doesn't make sense. Okay. So my algorithm just did something here that leads me to believe that there is a flaw in the logic here, because I think it took its profit. So let's see here. Those are the two that I just saw. Okay. Here was the long. Okay, so it was long from 04 essentially. And that should be one. Oh, I see. No, wait, that still doesn't make sense. So my first thought was, okay, maybe it's been an hour, so it's exiting because it's been an hour. But that is not the case. Maybe it got below 47 briefly, and I'm just not seeing it on the chart because it was intrabar. But for some reason, it says that it saw imbalance short and is going short, even though I don't think it should be doing that. And I kind of wish that it was still long and waiting for it to catch its. But yeah, this is correct. So I don't know. Oh, you know what? I never changed. I wanted to change something, which was I don't want it to trade after 9 o'clock. All the ones that it's caught like late after 9 o'clock have all been bad. Right, a recent guy is taking legal action against a major prop firm for holding back his payments. Yeah, well, that surprised me either. If I had things my way, you wouldn't be allowed to have funded sim. It would have to be, okay, they pass the combine and then you're putting them straight into a live account from there. And if the prop firm doesn't work under that scenario, then it shouldn't exist. Oh my gosh, it's coming down. What the heck? If this ends up being a really good profitable trade, I'm going to be really stunned. But man, especially in the 5-year, they're really seeing a large amount of selling there. Well, it was only like 3 ticks, so I shouldn't get too excited. But it does kind of seem that something was happening there. I was hearing something about Istanbul on the tweet, but I don't think that's related. I don't think that's related. U.S. State Department says U.S.-Russia exchanged notes to finalize an understanding to ensure the stability of diplomatic banking for Russian and U.S. bilateral missions in meeting in Istanbul. Oh, okay. Okay. Oh, you know, I didn't see this comment from Nick Timmeros. Let's read that. Kansas City Fed President Jeff Schmidt says he's not willing to take any chances on inflation so far, Though the spike and subsequent decline in inflation over the last few years, the Fed's actions have been effective in keeping longer-term inflation expectations well anchored. Now, with renewed price pressures likely, I am not willing to take any chances when it comes to maintaining the Fed's credibility on inflation. You know, I think that there definitely is something to be said that, like, this situation would be different if we hadn't just recently had inflation. Right? Like, we were still having the trade wars, but we hadn't recently seen inflation. Whereas it's the other way around too, like, right? Like, if we didn't have the trade war going on, I think that the Federal Reserve would probably be saying, yeah, we want to bring interest rates back down to a neutral rate. How about doing a hybrid for the bot? Use it for entries, but you manage the exit with the DOM? We could totally do that. We could totally do that. But it's kind of like, I kind of want the trades that I take on the DOM to be my own. I don't know. I guess the issue is that I don't necessarily expect this algorithm to be profitable all the time. I don't know. Maybe I have to think about what I'm doing. Maybe I do think that, like, it's just a great strategy and I should just let it trade. And Julian says we did have inflation. Well, yeah, I didn't say that we didn't have inflation, but they printed the money. Prices barely moved because of the decades of globalization causing deflation at the same time. That's gone. Yeah, well, that's interesting. You're saying that, yeah, we print money all the time and doesn't do anything, but it did something after COVID because we were also experiencing deglobalization. Maybe. But I mean, you would also have to admit that the amount of money that we printed during COVID was really, truly insane. And actually, so I wish, did I save it? I think I saved the link somewhere, but I'm too lazy to go and find it right now. There was a study where they kind of tried to quantify not only the different factors in inflation that we saw after COVID, but like how much they mattered month by month. And what that showed was that the stimulative effects that they put into the economy were all perfectly fine and completely appropriate. And that the real mistake that was made was not raising interest rates sooner. That if the Federal Reserve had raised interest rates 6 months earlier, that we probably wouldn't have seen the same crazy run in inflation. So that study kind of suggests that the fault actually falls with the Federal Reserve. But I would note that was around the same time that Joe Biden did his stimulus that was unnecessary, and I think really contributed as well. Well, it's fine if you agree that the central bank should. I do agree that central banks should have a 2% inflation target. Let me put it this way. I believe that the inflation target should be above 0. I kind of don't see things working otherwise. VIX went back into contango? Yeah. Why? Because if you don't have some amount of inflation, there is not enough of an incentive for people to invest to make the whole system run. So I think there's also another issue of it. Think about, like, what if our inflation target was negative 2%? Okay. And like everything's kind of going along hunky-dory. People make money by saving, but it's not enough that it causes the market to go into a recession or whatever the deal is, right? But then what happens when Congress is going to Congress and prints too much money and causes inflation? It's going to happen eventually, even if the inflation target is negative, right? Then the inflation that you're going to get is just like that much worse, right? So I don't see it like that. The return on investment doesn't change because of inflation or deflation. I think it does. I think that if inflation for the last 100 years had been zero, that the financial world would look completely different. Of course, I don't think that you can go in and say, okay, like over the past year, inflation has moved up, so do we see more investment? I don't think that you could look at it in those terms. I think that to properly study this, you would have to create like some sort of an agent-based model to say, okay, so like here are the rules that everybody functions by now, and we have a 2% inflation target, and then we're going to change the inflation target to negative 2% and see how the agents end up changing. That's how you would have to do it, because we've never had a period in history where the inflation target was low enough for that long, because it's not just like, okay, like what is the effect of inflation on people's behavior, but like what is the effect of just telling people what the inflation target itself is on people. That's another thing. And you can't test, there's no test case for that. Yeah, I understand that you're not arguing for negative. I'm merely saying negative because that's an extreme case that I think most people intuitively would understand why that's a bad idea. I mean, I think it can take this a step further, right? Like, the reason why do you want it to be zero? Let's take it that way. Why do you want the inflation target to be zero? There you go. Julian says, because I feel that money should be a store of value and not a piggy bank for the government to tap into. Yeah, that's exactly it. No, I mean, that's exactly it though, Julian, right? It's kind of fucked up, isn't it? It's kind of fucked up. We want our money to be sound. I want to be able to be comfortable. I want my labor to make all of the stuff that get paid for the labor that I do and then relax. And the whole thing is that that's not what the government wants. The government wants you to constantly have pressure on you so that you're constantly working and providing more and more value to the economy. And the unfortunate truth of it is that I really think that is like what's in the best interests of the society, as much as distasteful as it seems. Or at the very least, it seems to me that that's why economists have set it up that way. I suppose, though, that one thing... So, here's another take that just kind of popped into my head. And I'm not saying that this is what I believe or anything. I'm just saying here's maybe a possible alternative explanation. Maybe the inflation target is 2% because they looked back across the history of inflation at the time that they made the Federal Reserve, and they said, well, there is always some amount of inflation. So we need to have a target that has some amount of inflation. Because if it was actually zero, then monetary stance would be too restrictive. Maybe they came to it from that direction. But the reason that's commonly given is that it's a benefit to the economy because it provides an incentive for people to participate in the system and invest. Are you saying that the goal was a 2% ceiling? No, yeah, it is a 2% target. Well, so there's another thing though, Julian, that we have to consider here, which is that there is going to be a natural okay, the amount of money that is in circulation has to increase over time in accordance with the size of the overall economy. And the size of the overall economy is always going to, is supposed to always grow because the population is always growing. So you could say the inflation target should be in line with the population growth. But that is perhaps why this has become a more significant issue, because we are not hitting that in population growth. Population growth is slowing down considerably. And so if population growth is slowing down, but inflation continues up, then what happens? Everything that we have is just worth less and less and less. Because our economy is not growing enough to compensate. And then what happens is people see that there are less resources available to them, and they are therefore less likely to reproduce. It becomes a self-reinforcing cycle. Maybe that's part of what's going on. Maybe. Although I actually kind of doubt that scenario, because everything that I've seen is that actually, like, people are more likely to reproduce when they're poor. So consumption in different population categories are different and don't affect supply and demand and prices that much. I'm not quite sure I understand what you're getting at, Andre. A poor family that leaves a paycheck to paycheck doesn't have the same weight on inflation as it. That's okay. Yeah, I guess you're right. But here's a question though. If it's white collar workers is the where the employment market is really having problems, then shouldn't that mean that there should be considerably less pressure on inflation? And yet that doesn't seem to be what people are saying. People are kind of saying that, like, well, we're concerned about inflation even without the tariffs. I think that the Federal Reserve would still be cutting, but I think that there would still be concerns, like especially in housing. Okay, so here's another thing, right? Is that's kind of like a separate thing. There is a lot of pressure on inflation because of the cost of housing. And the cost of housing is high because we're just not building enough houses. And that doesn't have really anything to do with, well, I'm not going to say it doesn't have anything to do with monetary policy, but it's not really the monetary policy that explicitly that's causing that. It's really kind of more of the changes that they made to the monetary system and everything that makes it difficult and less profitable to fund the building of new homes. The tariffs will be catastrophic if he still puts in the higher rates in 90 days. Well, okay, so let's talk about that. You're segueing. I think that you're making that as an argument about, you know, the thing they were talking about, but I feel like that this is a good segue into a more pressing matter. It seems to me that the tariffs that they have on today are still pretty bad for the economy, are still kind of a disaster for the economy. Like the retaliatory tariffs were like doomsday. Like it was just so much worse than what people were expecting. But a 10% across the board tariff and 125% on China is really bad and is probably gonna hurt growth still, unless it really brings China to the table and China negotiates. But if China does what they had done last time, then it's gonna be a real problem. 125% is insane. It really is. I mean, like 125% is like you're not going to be buying Timo stuff anymore, right? You'll buy quality clothes. Or Shein. That's what I should have said. Shein. You're not going to buy Shein stuff anymore, right? It's just like it really does seem like a recipe for disaster. Like, yeah, the market should rally because it is a move in the right direction. But I wouldn't count out the possibility that we haven't hit the low for the year yet. All it takes is for them to come out and China saying, nope, we're not going to do anything. We're not going to go negotiate or anything. And Trump say, okay, then it's just going to stay at 125% for markets to go right back down there. Because I think that's still a level that could create a recession. It's not guaranteed, but it's possible to create a recession. So, and if we're going to have a recession, then they can go so much lower. And I'm kind of sitting here watching this and like everybody's reaction to it. And it's like everybody thinks that it's over. And I'm like, are you guys kidding me? This is just getting started. What I feel is worse is the blatant disregard for basic economics from the mega crowd. Well, you know what, though, Julian? I don't think that it's a disregard for basic economics. I think that it is, as always, listen, I have a hammer, so I see everything as a nail, but I think that it's an issue of complexity, right? There are so many different factors. I think that it is just like objectively wrong to say that like protectionist measures are bad in all circumstances, for instance. I don't think that there'd be very many economists that would argue that, but we kind of act like that's what it is. That it should just be always free trade all the time. But no, like it seems to me like there are some situations where protectionist measures are necessary. And so then the question is, when are they necessary? And the MAGA crowd, they feel that it is necessary. Okay, sure. That's like really the only thing that they can really see or think about, right? Like we just don't have the brain capacity to think about it beyond that. Well, we need an agent-based model to say, okay, well, we do this and we do this, like and then we could go through different scenarios and like different ways to play it and have like a good policy. But we don't have that. So all we're going to get is people hyper-focused on one issue and just kind of neglecting the other issue because it's too inconvenient. So it's not like that they disregard basic economics. It's kind of more that they know that there's this one thing that they think is wrong, and all I'm going to do is make sure that one thing happens, and like the rest of the things what happens, and we'll pick it up at later, you know? Like, let's see here. But the costs of that are not on foreigners, but on U.S. citizens. Well, I wouldn't. I don't think that that's accurate. I think that the cost is borne by both sides. Because I listen. Everybody gets this. I don't understand this, to be honest with you. Like, why is everybody so obsessed about who actually pays the tariff? It doesn't matter. Everybody bears the economic cost because the end result is less economic activity. That hurts everyone. Probably it hurts China more than us, but it still hurts everyone. Let's see here. The standard of living in China could rise because they get to consume. No, I don't think so. Because, again, it's like people in China could consume that right now. Why aren't they? Well, it's probably because they're just already consuming the amount that there's demand for, right? Like the net result here is that demand for those goods goes down. So it hurts them either way. Like a certain amount of economic activity is basically guaranteed to go away in the short term from a policy like that. And a larger share of that is in China than it is in the United States. Because a larger share of that income was being made by people in China than from people in the United States. But people in the United States were making money off of it. So they will be hurt, just not as badly as China. Does it matter? I don't know if it actually matters, to be honest with you. I think that the harm done to both countries is enough to cause big problems. I think some people have this conception of it that, like, oh, China will just be absolutely in poverty and on the brink of revolution, and we'll just be sitting over here in the United States. Yeah, it won't be as like the hot times, but we'll be doing okay. No, it's not going to be like that. Like, everybody's going to be hurting. Well, okay, so now you'll be stuck with those dollars as you saw yields rose, so there was no flight into your debt. That's not a good sign for the U.S. Well, so let's go back to we talked about that at the beginning of the stream, because the issue that you have there is that we don't really know why that happened. Some people believe that China was selling debt. I think that's unlikely. Some people believe that Japan was selling debt. I think that's a possibility. I don't think that the action that we're having is very consistent with that theory, but I can't discount it. But we also saw basis trades blowing up. So if it was basis trades, again, I can't prove. In a month, we'll know. In a month, you'll be able to look at Japanese holdings and see if their holdings declined, right? But let's just say that it was basis trades. Well, if it was the basis trades, then that is a short-term liquidity-based factor that would have gone away. In other words, if Donald Trump had held on and gave us another 2 or 3 weeks of this, then probably you would see interest rates come down. Unless it was Japan, and if it was Japan and they're just continuing to sell for weeks and weeks and weeks, then it would be different, right? So the issue is we don't actually know that that's what happened. I tell you what, I've kind of we've kind of been stuck in this little range. So I think, Octavius was saying, well, hey, have it take the, do the entries, and you decide when to exit. I think that if I was deciding when to exit, I'd be taking it out right now. But I guess we can say that the way that things played out is not a good sign. That's true. What would have been better was rates declined. But you know what? Like, come back to a chart. Where is it? Volume profile. Here's the yen. Right. Wait, what day was Liberation Day? It was April 2nd, right? Here's April 2nd. Like, rates did decline at first. And then there was this day right here. Or no, was it? Sorry, which was Friday? It was the 4th. Yeah. So on this day, that one I think was because, it was like, oh, actually no, I'm not sure. And I don't think I ever really understood why this particular decline happened. Okay. But this decline happened after the, hey, we're going to do a 90-day pause. Oh, wait, fake news. So there was some insane amounts of volatility. And then after that volatility was done, treasuries sold that whole day. Okay. Next day, flat to down. Then in the overnight, they started selling again. Okay. But after the initial news, interest rates did decline. That's why I say I think that that this is kind of more in line with leveraged trades getting blown out. That, like, between this day and the huge spike that we had after, the fake news, these people decided, well, it's really not worth it to keep this on. We're going to reduce our risk. And that ended up meaning selling treasury futures, and that's why it moved down. So if that is the case, then that flow is done and probably should come back up. Probably. But then again, like, I come back to this thing. Like, when you look at the daily chart, like, then it really comes into perspective. Like, okay, what was it about September that it was okay for rates to be declining, but not now? I don't understand. Is it like the only thing that's changed is Donald Trump? And you're all trying to tell me that it's not, that it wouldn't have mattered. Right? Like, you're all concerned about inflation coming back. And not just because of tariffs. So, like, that just doesn't jive. Right? So how do I square it away? Well, because it's actually just a function of people taking the trades. In other words, the interest rate right now is not anywhere even remotely close to what it actually should be based on the fundamentals because of the trades that people are taking. I think that based on the fundamentals, that we should be closer to like 3.5. That's what I think. Because I think that the current monetary conditions are too restrictive. And this whole thing with, like, a trade war, I think just kind of like, I think the rates are too restrictive. The Federal Reserve should reduce interest rates. And I view the tariff as the opposite. Everybody says that the tariffs are going to create inflation, and we need to be concerned about that. And I'm saying no. I'm saying I think that the level of tariffs that you're putting on here are going to hurt growth so much that you will actually see deflation, which is what you saw in the CPI today. That was before the trade. That was from numbers before the whole trade war. Okay, you could see that people, in anticipation of what could happen in a trade war, they were not buying as much, and we were getting deflation. But you know what? The way that this always seems to go, every time that I've been in a trade or I've taken a position on an issue like this, what ends up happening is there's all of this drama and we're all trying to figure out what's going on, and then something else comes along that makes it all irrelevant. Right? It's going to be like, what could be those things? It's like, we're all concerned about inflation and yada, 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 yada. And then, like, China decides to invade Taiwan. Like, that's the way it always goes. The market will get obsessed about one issue, and then that issue never actually resolves, and something more important comes up. Where is this position at? It's still like just a little bit in profit, right? Oh, there it is. Yeah, I'm just a little bit in profit. Now prices haven't adjusted. Well, that's true. Yeah, what you're getting in the CPI is people not buying as much stuff because they're worried about the tariffs are about to come and the economic calamity that could come from it. And the increases in prices that you should see because of the tariffs haven't hit yet. In fact, what seems to be happening. So here's what I think you're probably going to see next month. Well, maybe you'll see that in tomorrow's number, but I think that you'll really see it next month. Is like CPI will probably be mostly in line, but PPI will be much higher. So basically, like, costs increasing for producers and companies just eating it because they don't want to pass those, because they don't think that people will buy if they pass those prices on. That's what I think the next step is going to be. Now, once you get beyond that, then it's like, what tariffs have been in place, right? I think that what you're going to see is the price for some goods go up, but the price for other goods go down because they're losing the demand. It's stealing the demand for other places. And so you won't see as broad-based inflation as a lot of people are expecting. Like, the inflation expectations from Democrats is absolutely bonkers. Like, I think that if our inflation target is 2%, and the amount of inflation that we get from tariffs is probably like 0.5% or something like that. 0.5% or 1%. Granted, if we were to have tariffs on everything, well, there's this issue. Like, there's got to be this middle ground where, like, you get really high tariffs, but it's not enough to send you into a recession, where you would see like maximum. You get what I mean? Like, there's got to be a curve that's like tariff level, percent tariff, and then the other axis is, no, let's do it the other way around. So this is the tariff level, and this is the GDP growth, right? where, and is it just like this? Let's just draw it like this for a second. There's some level at which there is a recession. So then I guess I would have to do it with the z-axis to then say there's this other dependent variable is how much inflation we get, right? Yeah, that's what it's got to be. It's got to be like this. Okay. So this is the tariffs. And this is GDP. And let's see here. If the tariffs are low, then the GDP will be high. And inflation will be, let's just draw like a big surface like this for it to be like this is 2%, right? This is 2% inflation. So that would be this point right here. And then we get this other one where tariffs are high and GDP goes negative, right? And somewhere in the middle here, oh, so GDP is high and tariffs are, tariffs are high. GDP is low. Wait, did I do that? I like confuse myself there. There's a situation where tariffs are high and GDP ends up being low. So somewhere over in here. And inflation actually ends up being negative. Right? So there's got to be some sort of place up in here where this surface kind of looks like this, where like, you know, inflation is maximized by the tariffs being high, but not high enough to hurt growth too much. I bet you that if we spent enough time programming, we could probably model something like that. But... oh, hey, we're getting a more extended downturn at just the right time because it's almost time for me to quit for the day. And I do want to, by the way, if I could do this, like, is it just disabling the strategy? Close
Order
position.
filled.
Okay. So when I do that, then I can't see the realized unrealized anymore. But it was almost $400. So that's like the third day in a row that it's got significant profits. This would not have only passed a funded trader program, but would be getting a payout now. Unusual market, but okay. But let's, while I'm thinking about it, let's change this to not be 930, to change it to 8:55. Okay. That is to say, it will not take new entries after that. If it's already in something, it will allow it to continue going. Open that combine and we'll pass it in the next couple. You know, maybe I will, Paul. You know what? Maybe we will. The one thing I'm a little bit weary about. Okay, so when I say like it would have passed the combine, that's like if you were trading 3 contracts, right? If we were trading 2 contracts, it would have been like 2,000 on Monday, 1,000 on yesterday, and then like 800 today. So I think that we could do it. It's just the issue is you can't have a drawdown more than 500. Okay, so I do have stuff set up in the strategy for that, but we haven't tested that yet. Like, I've tested it in back testing, but not under live circumstances. So I don't think that I have done enough. I don't think that I have done enough testing to really take it live. But the issue is that by the time that we would have that evidence, it might not be as favorable of a market. So we might need to just kind of do it and hope that it works out and like really watch it like a hawk, right? Also, before I do that, I would want it to do the thing where it does not trade news. That's another thing. Don't want it to trade those biggest news moves. And part of that, oh, actually, no, we kind of turned it off and everything. Kind of suggested that it would have made like 260 off of the news too, but I don't think we wanted to trade those. Most combines will not let you trade news, so but maybe we will do it. I was thinking yesterday I was going to make a video that was like explaining it to kind of promote it, because I was like, well, people will really be impressed by this, but that's probably the wrong play. The right play is probably to trade it, pass the combine, and then crow about it after that. A bad gambling influence. Yeah, I mean, it's not really that bad. I also, here another issue with that is I hate all prop firms. And I used to always say, well, I think the one that if there's any that's really trying to be genuine, it's probably Top Step Trader. But I've seen a couple of things from them that I'm all kind of like, no, I still don't want to do anything. There was this new one where you kind of get to set your own rules. So I could maybe do that. And I probably would have to do that because I think that most of the prop firms don't allow treasuries, right? So it would have to be a prop firm that allows treasuries. But I think that if we were to do it, I would have to not tell you which firm we are using, so that they don't get promoted from it, right? Well, okay. Maybe we will do it. But not this week. Okay. I'll see you guys tomorrow. Stay excellent.